Hey, Pat and Doug here with another episode of the Wealthy Gym Owners. And in today's episode, we're going to talk about real estate as a wealth building vehicle. Obviously, that's an area that Doug has developed a great level of expertise and experience. So he's going to drive most of this today, but I've certainly got questions because and I mean, we all want to build wealth. We all want to use our small business, our gym, our training business to, create that opportunity for us. And really, there are a couple ways that are pretty obvious that this can happen. So, Doug, do you want to kick that off?
Yeah, in regards to the real estate, the first two things before we speak like tactically, what we can do, I would say the first couple things I would maybe share is one, it's certainly got to be an interest of yours, right? Like it's not, I don't really believe in the full like passive, 100% passive side of this. Although it can be very lucrative and build long-term wealth and help your family and all that fun stuff. And it's certainly, I don't think it's hard as running a gym. It's a lot less labor intensive to compared to running the gym, but I don't want to promise this pipe dream that it's like, this cash cow and it's completely passive. So I think you have to have an interest in that, interest in real estate. And the other thing I would say is, from a belief system, being okay with some level of debt, right? Real estate, at least right now and in the marketplace, and since I've been in the marketplace, it doesn't really lend itself well to getting a high return on investment for like cash purchases. Most of the time, we're making our return based upon leveraging it with some level of financing, some level of debt. And obviously, everybody has their different beliefs as far as being debt free versus not. And if it's helpful, my approach is if it's producing income, i.e., rent, I'm good with the debt. Any other debt like credit cards and what we might call bad debt is obviously not good. So from a belief system, I think those are two things I would start with.
So so the two sides of this really that and I'm oversimplifying because obviously we're trying to catch people at an early stage of this, whether it's entry level or at most like an intermediate level of using real estate for wealth building. But the two sides are, some commercial space where you're your own tenant. So just buying the building or buying a building that you are going to operate your gym in. And then the second side of this is a short-term rental. And I think that when we get to that, we can talk about your first short-term rental, because I think that that is a brilliant model that checks a lot of boxes for the people that we serve too. So let's start with the commercial side first.
Yeah. So, I think this is, I would start with saying this is more attainable than most people realize, because of, one, traditionally the type of building that the gym owner is looking to purchase and that stereotypical, owner avatar. I'll talk about that in a second. And then the other piece of it is, of course, the financing piece of it. We can use programs like the SBA to really help with not needing as much as traditional commercial financing would require for capital. So the first thing I would say is, for context, I bought our gym building in 2015, and it was actually my first ever real estate purchase. I bought that building before, my wife and I bought our first house in 2016. So, you know, when I was looking for a new space from our first lease, I didn't even think buying was an option. I mean, I was 24, 25 years old. Like buying wasn't even a question. I had probably 20 or 30 grand to my name at the time. Um, but the marketplace did not have anything for lease in the town that I was in. And I think the traditional building that the gym owner is going for, let's call it light industrial, right? Many of us cannot afford, at least in the early stages, of being in Class A real estate. Um, and the Class A real estate may be, too overpriced, but there's plenty of light industrial in that, whether you're talking 2,000 square feet or let's say, even upwards of 6 to 8,000 square feet. In a lot of markets where you can get what I would call maybe, Class B, second tier, it's not on the main strip, but it's one row back. Those types of owners are a lot of, like, I even think of one of our boardroom clients, he's in a building where the owner's in his 80s and, he's had the building forever. He's got no debt on the building. And I find that to be very common in that type of real estate right now. And so the reason why I bring that up is that's how I got my building. I was just door knocking of buildings that appeared to be vacant, and our building was a steel metal building that is very, desirable for a training gym. And it happened to be some guy's, storage for his antique cars. And he was just kind of, in a stage of life of downsizing, and worked with me everything from, obviously a, negotiable price to, even, seller financing some of the down payment. So, I was not able to come up with 100% of the down payment, which was about 50 or 60 grand at the time. As I mentioned, I only had 20 or 30. And so he was able to provide me a seller's note to help with the down payment for the other 25. And I could pay that back over, a year or two. So I think, just starting with this idea that certainly being your own tenant is desirable if you are going to invest in real estate as a wealth building vehicle. Controlling the entity, controlling the physical space that your operating company, i.e., your gym, is in, is certainly has many, many benefits. But I think, just realizing, yeah, you can do the door knocking, you can do the loop net and the Crexy searches and get your broker involved. But some of this is just, getting out there and seeing who the owners are and see where they're willing to go and see if a lot of them are in a position where they're willing and able to help you from a down payment perspective.
Yeah, I think that, most of the gym owners in our industry probably feel like that's a big leap, right? Because they're not in a cash flush position. But yeah, I mean, you demonstrated some ways that you were able to put that together. Obviously, you did that in a stage of your journey where your cash position was probably a lot more like theirs. So I think that's great. And I mean, you have a built-in tenant, right? Like we're in a good spot where you're kind of double dipping. You're building some equity, so it's not just, hey, we're operating a cash flow business. We're now building something that has an asset value. So that's one. Let's talk about the other side. When you guys got into the first property that became a short-term rental, talk about that.
Yeah. So, I think it's very common, at least I hear it a lot now. And in hindsight, it was a very big belief of ours, my wife and I, as we were raising a family, to have this second home. And at least in Maine, I don't know if it's common elsewhere, but here in Maine, it's very common to have either a ski house or a lake house. And we're not skiers, so very much wanted this second home, this lake house, that, an hour or two away we could go on weekends, or hang out for a week up in the summertime. And that was always a goal of ours, to have this lake house. And so when we acquired this, it was not even, I didn't even know what short-term rentals were. Like, I knew what Airbnb was. I had used Airbnb, but from an investment standpoint, it was not really the goal for this to be a whole separate business like it is now. The thought process was, let's just have a family home that we can use and the kids will have fun at. And, some luck certainly, but throwing it up on Airbnb during the pandemic, everybody was trying to escape to the middle of nowhere on a lake, so it did very well and ended up turning into being I would say the first domino to what became the short-term rental portfolio. But I think that's again very like I don't want to promise a something that's not achievable, but I mean we're talking in many markets, you can find these homes for say 500 grand, and you can go and again, whether it's seller financing or you save up 20, 30, 40 grand. You don't need to put it's not a commercial asset, it's a residential asset. So you can typically put 10, 15% down rather than the traditional 20 or 25%. So in the grand scheme of things, if I'm looking at it from, hey, I got 50 grand that I want to invest, potentially putting it into a second home where you can, use it yourself. It's a lifestyle asset, but also, during the time that you're not using it, it can pay for itself. And in real estate, although it's not personally my goal just to break even, for a lot of people, to be clear, for a lot of people, their goal is just to break even. And because, the long-term asset building in value, the tax benefits, et cetera. But it all started with that kind of lifestyle asset mindset.
Yeah, I think that's, or I mean, that was just kind of an aha moment for me because as somebody who vacations way too much, it, I mean, I looked at that and I thought, man, this is such an exciting opportunity for a lot of small business owners, um, because we talk about wanting to build a business that allows for quality of life. We want, the flexibility and freedom that I think small business owners earn through the work that they do. And, a lot of that I'm very much into experiences, but a lot of that is, I mean, it's an expense. It's I mean, the amount of money I've poured into vacations is pretty staggering when I add it up. And if you think about, okay, you can do this and then also utilize it in a way that it's paying for itself. I mean, your gym can cash flow to fund the initial down payment. You can, rent it out when you're not using it and cover hopefully all of your expenses and build, build some equity that most people just aren't getting in their gym, especially if they don't own their own building. So I think that those two concepts, I think it certainly when people see, okay, Doug's got 12 short-term rentals and he owns this building and that building and whatever else, that may be a big leap, right? It's like when somebody says, oh, that person has 10 locations or something at their gym. Well, I mean, most pretty grand things start in pretty unspectacular ways. It's like one simple step. And depending on the place somebody is, either of these steps can be a first domino towards wealth building. And for the people that we work with in programs like Project 500 or Boardroom, their business is going to be healthy enough that they're going to be in a cash position that they can start to explore these things. So, anything else you want to tack on to that before we wrap this episode up?
I would maybe just end with a few case study examples so that it's maybe not just examples of not just me doing it, but we had I think of two of our boardroom clients that I've helped and coached through buying short-term rentals, and kind of two different outcomes, but they both work. They were both originally intended to be lifestyle assets, right? A couple hours away from their primary residence. Family was going to use it when they're not and when they're not using it, renting it out, and both going very, very well. One gym owner realized, hey, this is all I want. It's a lifestyle asset. My wife and my kids use it. It's great. It makes a little bit of money on the side. and now focused on scaling gym locations. The other one got into one and is already, it's doing well. Family doesn't use it as much, but still, once or twice a year gets up there to use it. And now is looking at trying to find a second one. So I think, as a case study example, like I think if you're interested in it, certainly start with, I always recommend starting with somewhere you've been at minimum, and start with somewhere that you would see yourself vacationing. Because if you don't see yourself vacationing there, it's going to be a hard sell. And make sure as a fallback that that's where you start. And then once you get into one, you'll learn, just like we did with everything else. Once you're in it, you'll learn a lot more, and you'll see whether you like it as a long-term thing or not. But just wanted to share those two as case studies of other gym owners in our program that we've helped with the short-term rental stuff.
Awesome. Well, if you have more questions about short-term rentals or, purchasing your own space as a gym owner, be sure to reach out. I mean, these are topics that, we'll work with clients on through the Wealthy Gym Owner coaching programs. And that's another episode of the Wealthy Gym Owner. Pat Doug signing off.